Buzzsaw, what's happening, buddy?
Hey, Jared.
All right, man. January, right? January 2026, getting the year started, talking to all our dental practice owners on what this year looks like. And I thought we'd just jump on here and kind of shoot a quick video on, we're accountants, right? We're big on checklists, but like, think about a January tax checklist, right? Things our dental practice owners need to really go through. And maybe we just go through five things if you're down with it.
Yeah, sounds great.
Let's do it, man. And I will caveat this, like going off of the assumption that, of course, let's just say it's mid-January here, whenever this is being released, that your 2025 tax situation is in a good spot. That's first and foremost if it's not, right? We're going off the assumption you know where you're at for 2025. Hopefully, you've already paid in all your estimated taxes, and you just need to kind of true things up when you get your return filed in 2026. But we're looking forward to 2026 on this buzzsaw. So I got five things I'm going to throw them at you, man. So the first thing, owner comp. What do people need to do right in January regarding that?
Yeah, so if you have an idea, kind of what you're wanting to take home next year, payroll versus distributions, that's kind of what you need to start thinking about. Get that payroll set at the beginning of the year so you can kind of set it and forget about it. So when you get to December, you haven't overpaid, you haven't underpaid yourself, have to scramble either cancel payroll or do a bonus at the end of the year. Set that now, early January, and you're able to forget it the rest of the year.
Yeah, I've seen it a lot of times, right? I'm sure you have too, where you get through the first 6 months of the year, 7 months of the year, you kind of meeting with your CPA or whatever, and it's like, oh, I forgot to turn that payroll back on, so I haven't paid myself any W-2. And also, kind of key is if they're paying in through withholding on their W-2, like you make sure that's in a good spot so you don't, same thing, get through 6 months, you're like, crap, haven't paid in anything yet.
Right. A lot of doctors could rely on that payroll withholding to cover their estimated tax payments.
Yeah. One thing too, I'll throw in maybe on the payroll side, paying your kids through the practice or whatever sort of entity structuring you have set up. If you utilize that strategy, right? If not, ask your CPA about that. And if you're eligible to do that with your kids, but also evaluate what you're paying them and kind of strategically do that throughout the year. Is that fair to say?
Yeah.
All right. Love it. So owner comp, number two here, major changes, right? Communicate those major changes to your CPA.
Yeah, so typically quarterlies, start to go out in April, second quarter, June. Those are going to be basically what's called a safe harbor estimate. So it's going to be based off your prior year. If the current year is going to be substantially different from the prior year due to some big event that you have going on, let your accountant know so they can factor that into those first two quarterlies of the year. Otherwise, it's just going to be based on safe harbor, and you might be underpaying or overpaying depending on what you have, changing in the current tax year.
Yeah. Yeah. Key thing, right? Just always don't same as last year. I mean, it's kind of a good thing to start from, but see if anything's going to change from a deduction or income standpoint. So that will change. All right, man. Number three here. How about estimated taxes? What do they need to think about on estimated taxes?
Yeah, so like I just mentioned, those are going to start being needed to be paid in April. However, that doesn't mean you need to start saving, in April. You need to start saving in January. So, good thing to think about is to start putting monthly cash away into maybe a tax account or something, so you're ready for that first quarterly payment that's due in mid-April.
Yeah, 100%. I mean, that money's going to be due, so start sweeping that aside in January. We kind of got another video we just put out. We'll put a link to that here, but talking about get that separate tax account set up in that practice. Don't get caught by a surprise. Always get caught by a good surprise where you get a little too much maybe in that tax account and it's a little icing on the cake. Oh, spot on. Yeah. Pay those estimates, get money set aside. All right, two more here, man. What about like retirement contributions? When they started thinking about there?
Yeah, so kind of similar to the estimates, if you know you're going to have a cash balance plan or profit sharing plan that you're going to contribute to, probably best to start setting monthly money aside for that as well. So you're not scrambling to find a lump sum when the time comes to get those paid. Start throwing money into an account monthly. That way it's there when you need it.
Yeah, saw that the other day with the client, maybe last month, where just kind of got caught by surprise, right? Wanted to utilize that cash balance plan and that tax saving strategy, but need to put a chunk of money over there to do that. Didn't have that set aside throughout the years of newer clients. So that's something we kind of hopefully can instill some little habits there to set that money aside for sure. All right, Buzzsaw, the last one here, man. Document and tracking. Sounds like a cheesy one, but extremely, extremely important, right?
Yeah, so there's several tax strategies that we like to use that, do require some good document tracking, and one of those would be tracking your miles. If you're gonna either depreciate your car, we need to know the business use percentage, or taking the standard mileage deduction, we need to know how many miles are for business use. So instead of trying to go backwards and recalculate things at the end of the year, if you can be proactive and start tracking things like miles from January on, it's just going to be easier down the road. Same thing with something like the Augusta rule. If you start to use your house for business meetings, just start documenting those as they happen, so you're not having to recreate, some documentation at the end of the year and substantiate those Augusta rule payments.
Yeah, love it. So, you guys thinking about your New Year's resolutions? Hopefully, you got them set. Hopefully, you've already still not fell off the wagon. You're still going on those New Year's resolutions. But go through these 5 points, right? Evaluate your owner comp plan right here in January. What that looks like, what you're paying yourself, what you're paying your kids if you're utilizing that strategy, communicating those major changes that may or may not be happening this year to your CPA, so you kind of get that tax plan revised, which goes right into estimated taxes, right? Get those estimated taxes, set that money aside. Don't just get surprised in July. Retirement contributions, set it up, and then document and tracking. It just always sucks, right? You get to the end of the year and you're getting that stuff together for your documentation, and it's November, December, and you haven't done anything all year. Get that thing started now, and you'll set January, you set 2026 up on a good note, but it's got to start up in January. So, Bussell, I appreciate it, man. Five good
Yep,
things you guys need to look at, and here's to a good 2026. Appreciate you guys.
absolutely.